Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters today ahead of the opening bell. On Thursday, we took a total of 5 trades, 3 winners, 1 loser, 1 flat, for a total absolute return of $3,669, or 2.8% in our 1% risk model portfolio, where we are risking no more than 1% per trade. This portfolio started 23 days ago, and since inception, we are up 49.52%. We need a 0.5% more to reach that 50% mark, and we're looking to do that here today. The SPX closed up 1.75% to 73.64. There was bullish indications right from the open. Semis were strong, which closed up 6.75%. Breadth was positive, which persisted throughout the full session. However, what capped upside early in the morning was the underperformance in the Mag 7 names, which turned red to green following a ceasefire headline from Trump, which sparked a squeeze rally, reclaiming the zero gamma level of 73.35 and moving into our upside target of 74.15, the SPX flip level. We were dip buyers down at support here, 72.75. 72.65, which was the previous low. Our expectation was for a squeeze rally. However, we were expecting that to materialize earlier in the session. But better late than never, a very nice move on the upside yesterday. For today, early pre-market, all major U.S. equity indices are in the green. The S&P 500 up 0.4%, and the IWM leading the upside up 0.7%, ahead of Michigan consumer sentiment due out at 10 o'clock. In yesterday's session, we had a bullish trend change on the 15-minute time frame, with the 20 EMA in green crossing above the 40 EMA in red and upsloping. And we're back above the zero gamma level of 73.50. This is a must hold for the bulls. A break below opens the door to the SPY put wall at 73.17, 7300, which is a big net negative gamma strike. However, in yesterday's session, it acted more as a pivot than strong support or resistance. But below that, major support 72.75, previous session's low 72.60. Unlikely to break the zero gamma level here, absent a catalyst. The edge is for continuation, given the fact that we closed near highs. Now, the signal for continuation is a break of the previous session's high, 74.13, SPX flip 74.10. In the event of that break, which it does look like we're trading above that in the pre-market, opens the door to resistance at, well, resistance overhead is a little bit less clear. We have a gamma level 74.50 and then some technical resistance up around 74.75. But the big level on the upside is the SPX call wall at 7,500 with the one-day implied move a couple points below. So that is within the 1 standard deviation range, potential upside target, and upper bound today. Transitioning over to our dashboard, total gamma exposure for the SPX is back in positive territory, 165 million notional. And this holds true as long as we hold above the zero gamma level of 73.50. However, bulls still need to reclaim the volatility flip at 74.10. This is our main transitional level. Above, all strikes are positive, that is supportive for the market price. Below, all strikes are negative, that is destabilizing for the market price. In terms of resistance on the upside, 74.30 is a bit of a level, 74.50, 74.75, which is more technical than anything, and then 7,500, which is the call wall. Again, potential upside target and upper bound. But in order to see that, we most certainly need to see bullish indications, broad market strength, semis, meg strong, and we need to see vol contract. So there's still fuel on the upside, and the market is pricing in elevated volatility yet again today, a 1.4% implied move, with the implied high at 74.98 and the implied low at 72.90.